Welcome to our special segment of Getting to Know Your CEO, where we continue assisting our audiences in the discovery of unexplored brand new asset classes and emerging issuers in the world's markets. And it's always a great pleasure to introduce the founder and CEO of Latin Metals, Keith Henderson. How are you doing today, Keith?
Well, sure, I'm very well. I'm happy. It's sunny here in Vancouver, which has been a change this year, but it's doing our souls a lot of good. We're very happy.
Very good. Yeah, no, it's a little bit, it's been raining since yesterday here in Toronto.
It's been raining since November here.
No, that definitely doesn't do well for the vitamin D.
Yeah.
So, we noticed there's been a lot of things happening here with Latin Metals, some exciting things happening. And recently, you announced the completion of some definitive agreements with AngloGold. Can you walk us through the deal with our audience and explain to our subscribers what this means for Latin Metals?
Yeah, by all means. There's been a couple of news releases. They're a bit like buses. There's none for a while, and then they all come at once. So the first one, as you've pointed to, is AngloGold, and this is really the culmination of about a year of work with a major company like AngloGold. Things sometimes move kind of slowly with big companies at the beginning, but once you get there, they start to move more quickly, and that's kind of where we're at now. So our deal with AngloGold is very good for us. It brings together two things that we like to see: really, really excellent technical exploration groups and exploration people, which AngloGold's got some really high quality people that are going to be working on this project. And the other thing we like to see, of course, is that AngloGold have got financial capability, lots of money, and they're going to spend it on our project. So this is a great start for us. The deal that we have announced basically is an initial option for AngloGold to earn a 75% interest. That involves, over a 5-year period, paying us $2.57 million US. Wow. So that's about 3.2 million Canadian. And on top of that, they'll spend a minimum of $10 million on the ground. Again, that's US. That's about 12.5 million Canadian. So with this first step for their 75% interest, they're basically expending about 16 million Canadian dollars.
Wow.
If they get to the end of that process and they like what they see, which we hope they will, then they have an opportunity to top up to 80%. And this is another interesting step because this is really more cash coming into us. So in order to get 80%, they have to define a resource, an amount of gold or gold equivalent in the ground. And to get the 5%, they have to pay us again. So they have to pay us approximately $5 per ounce. So let's say a company like AngloGold, they're going to be looking for a pretty big deposit. They're going to be looking for, let's just say they're looking for 1 million ounces minimum. So if they find that, and if they're paying us for the extra 5%, then by definition, they're paying us somewhere around $5 million or even more. So more money coming in. So we're looking, if they get to 80%, we've probably had something of the order of a little over $20 million coming in, and we'll still have 20% of the project, which is great. And this is what we try to do. We've got lots of projects. We're lining up lots of partners. And by having lots of projects, we really increase our chances of success. And this is part of the game here. So this project with Anglo is going to be very, very good. They're working on 3 different projects in Salta province. They're going to be paying us lots of money, and hopefully they're going to find a really big deposit.
Wow, that's incredible. Again, partnering with Barrick, partnering with AngloGold. These are huge players in the space, and obviously you must have something cooking to garner this type of interest from huge players like that. Great job, really good work.
Well, yeah, and, we like to think so.
We like to, I love it. And we saw your news release, your most recent one, regarding the Laksha copper project in Peru. Can you summarize what you have discovered at this project site and what happens next?
Yeah, this is like a dream come true for us in a sense, because it's got a couple of really good things going for it. Firstly, we acquired it for almost nothing. We staked it in Peru, which costs essentially nothing. Then we went on the site and we followed up what we thought was a good idea with some work on the ground, and we kept finding copper, so that's good. because this doesn't always happen. Exploration is a very high risk business, so we have to be grateful and excited when it works. We've done rock sampling, talus sampling, lots of kind of surface geochemistry, which gives us a direct indication of copper on the ground. We've also done geophysics, and that's what this last news release was about. It's about a geophysical method called induced polarization. Details, not really important. It's quite an expensive technique. It's expensive because it works and it's time consuming to do. And we spent $100,000 collecting this data. We've probably spent something of the order of $400,000 on this project, but it's got us to a really great place. We've got layers and layers of data, which is all pointing to 4 separate drill targets. We've signed a community agreement for 3 years with the local community. We've just had confirmation from the Peruvian government that we can go ahead with our drill permitting process. And we're on the ground doing that right now. So we think that by the end of August, early September, we'll have a drill permit. And this is the perfect combination for us in looking for a partner. We have really good targets defined.
Yes.
And we have the thing that can be the rarest of things in Peru. Even rarer than a deposit can be a drill permit. So we get this drill permit in place. We got the targets in place. We can be pretty sure that we're going to find a partner for this.
Wonderful, man. That's, you know what? We've been getting a lot of interesting questions from a lot of the investors, and a lot of more seasoned, accredited, high net worth individuals. They're asking a lot of interesting questions around these partnership agreements, and if you could shed some light on some of these payments and the way that process works.
Yeah, let's go back to Anglo American. So it's a 5-year deal. Money comes to us, money gets spent on the ground, but do they get to the end of the deal? Well, we don't know. It's an option for them, and it depends on the results. So there's a whole range of outcomes here. The first outcome would be that they spend a couple of years there and they find absolutely nothing, and they give it back to us, and we go, well, okay, that's disappointing. So that's the high risk business of exploration. Let's not spend any time on that one. The other end of that spectrum is that they find whatever they're looking for, and we don't know exactly what they're looking for, but we can be sure that they're looking for a very significant deposit. So let's again just say 1 million ounces. So a really good outcome would be that they find 1 million ounces. We end up with 20% of it. We can either at that point participate for 20%, or we can revert to a royalty and just take a 2% NSR. And this thing goes into production, and we've got money rolling in. Really good outcome. Reality, Roger, probably somewhere in between. So one of the really good outcomes for us might be that maybe they drill, maybe they find 500,000 ounces, and that's just not big enough for them. But for us, 500,000 ounces, whoa, what a good outcome. So in those kind of situations, they define some resources, they decide that it's not enough. They give us back the project 100%. Suddenly we're a company sitting with 500,000 ounces on the books, and we haven't paid a penny to discover them. That's a very good outcome. So beautiful. A range of different outcomes. Gorgeous. Most of them are pretty good outcomes for us, because we either get back a good deposit or we get to participate in something very, very large.
Unbelievable. I must say, Keith, as always, when speaking with you, there's a lot of interesting individuals in this mining space, especially in Canada and over the world. But I must admit, you're truly authentic. You're a gentleman. And I don't think a lot of people, a lot of investors understand how important it is to find people that say what they mean and mean what they say. And Keith, my hat's off to you. You do an unbelievable job communicating to your investors, to the market, exactly what's happening here with Latin metals. And I know for myself, I know for a lot of my investment community, they've been asking a lot of questions. They've been intrigued. Obviously, it's are extremely volatile. A lot of people out there are willy-nilly. And all I got to say is that this is the time to buy underexposed, undervalued assets with huge potential for upside potential, and especially assets that are de-risking their shareholders. And what you guys have done here uniquely with these huge partners like Derek and AngloGold is exactly that, because you don't need to raise money. That means you don't need to dilute the share count. And that is a huge key that a lot of these investors need to pay attention to. And again, Keith, thank you very much for taking the time to share with our investment audience your company's current status. And again, we look forward to hearing more from you in the future.
Okay, great. Thanks very much, Roger. And
Thank you.
thanks. I really enjoyed speaking to you, and we'll talk to you again. Thank you.
Thank you. Have a great day. Okay.